Hello everyone, welcome back to the channel. It's your boy here at SMB Trading. With my daily upload today, we're talking some data. So, if you're familiar with the channel, you know I've never really talked about the ISM manufacturing data. There are manufacturing PMI data that ISM releases. I know it's a lot of three letter words there. I never really talk about this data set, but today we're going to talk about it because something very interesting happened with it. We are going to talk about what this means for the market, what this means for these future inflation data prints that we're going to be getting later this month, and what I think the market is going to do for the at least foreseeable future based off of this data. So, ISM manufacturing data, it's just a monthly release. It comes out the first of every month. It gives you manufacturing data, all sorts of data for the previous month. This isn't a federal Department of Labor release that they're the ones who release the PPI and CPI. This isn't from any government entity. This is private, I believe. Yeah, this is private. I'm pretty sure, right? Yeah, this isn't a .gov. So this data, I would say, is more reliable than what the government prints out. That shit is cooked every month. We know that. So what this data gives us is just a look on the growth state of things. Is manufacturing growing? Are we growing on the production side of the economy, not so much the consumption side? So what this data means is we get a number below 50, and that means we are contracting. Whatever for manufacturing, you could see February, we got 47.7. So that means we are contracting. That means manufacturing is contracting. So you don't want to hear that word contraction whenever it comes to any kind of economic data. You don't want to hear that word, especially in a time of high inflation. We all know what that means. It's the big word we've all been talking about, stagflation. This really bolsters, really supports that theory that we are in a very stagflationary period because we are seeing manufacturing coming down. This means contraction. Rate of change slower than the previous month. This ain't good. So this has been the trend for the past 4 months, by the way. Not good. And now this also gives us data of prices. The prices for commodities, for raw materials, for all that stuff that manufacturers are paying for. So prices, when that comes in above 50, that means prices are increasing. And we saw a big leap. Last month was 44.5. That means prices were going down, which is supported by all the CPI data we've been getting. We've known CPI data has been showing that the rate of inflation has been coming down. But now this ISM data for February, mind you, we know what inflation looked like in January. So this is the first sign of any data we're getting for the month of February. We know that over February, manufacturers are paying more. And you don't want to see that. That's the worst recipe. When you are seeing contraction on the manufacturing side, but you're seeing expansion. You're seeing growth on what they're paying. So they're paying more to manufacture less. Very, very bad. Super bad. If we look at the month over month, you can see this is the first time since September that we've had a raise in prices. And you saw how high it was over here early. Also, by the way, I have a very bad sore throat. So if I'm clearing my throat a lot, I apologize. But I can't talk for more than 10 minutes without doing it. Anyways, this is the first time since September that we've had a number over 50. So this breaks the trend. We have been getting contraction on the price side since October. Very low in October, lower in November, super low in December, but then you see that uptick for January, 44.5, and now you're seeing a big uptick for February. So this is our first sign of what these future inflation prints are going to look like, what these future CPI, PPI, PCE prints are going to look like. And now I talked about that in a couple videos back. I said, maybe this is just a one-off. If you're still a bull, you're praying, you're hoping that the January inflation data was just a one-off, just a random uptick, not a sign that the disinflationary trend has broken. But if we get a second month, if we get January is high inflation and then followed by February is still high inflation, then that really just destroys that whole thesis. And that will really put more pressure on the Fed to admit that the disinflationary trend was only temporary, exactly like it was back in June, July, and then it upticked in August. And remember what happened in August? Not good. Remember what happened in August? Let's take a look. Going to SPX, baby. What happened back in August? Gee, I can't remember. Oh, that's right. We started dumping. Oh my God. We started dumping. I don't even know why I had my headphones on. So, not good if that's the case, and that is not what you want to see. So looking at the market today, you can see the S&P is down 0.5%. See the Nasdaq's down almost a full percent on super high volume. We still have about 20 minutes left in the session. Not looking good. Not looking good. This isn't what the market wanted right now. Looking at the VIX has been very interesting. The VIX is actually kind of down for the day. It's weird. The market going down, but the VIX going down with it is very strange. So this makes me think, well, what if the VIX does start to push up to 25? How low is the market going to go now? Because the market's retraced like 7% on the Nasdaq from these previous highs. I mean, we have seen a 7% retracement, right? Not retracement, more like a full-on dump. S&P 6%, but the VIX has only gone up like 3 points. It's very strange, very interesting, very much something you got to watch out for. Apple. Oh God, Apple, baby. Whew. You know, I've been telling you about Apple. We have broken that 200-day moving average now on Apple. Pretty high volume to the downside. Apple. Boy, I told y'all. I've been telling you, man. I've been telling you this for free. If you're a subscriber, if you watch my videos on the daily, you know I've been telling you about Apple to the downside. So if you followed Apple to the downside, then bravo. You're making good money today. I would ask if you did drop like a like and a comment. Please, the least you could do, man. But this is not financial advice. This is only entertainment. Do not follow my trades. Do not follow any of my future trades. Please do not. But Apple. I've been telling y'all about Apple. I've been telling y'all about NVIDIA too. Whew, NVIDIA to the downside looking good right now. We broke 230. They just dumped $10 billion worth of stock on its shareholders to raise some cash, which to me is a sign that the executives in NVIDIA know how absurdly overpriced they are at this moment, and they are trying to capitalize on that by raising some capital, which I don't blame them at all. That's a smart move in my opinion, but it is not good. If you bought NVIDIA up at like 235, first of all, if you did that, you deserve to lose money because you're absolutely out of your goddamn mind if you think NVIDIA can make a move like this and then just continue to go up as interest rates go up, as its future outlook deteriorates, as their net income dropped 50% year over year. You're out of your mind if you bought it up there and you think it's just going to keep going. You deserve to lose money. I'm sorry, but NVIDIA looks good to fill that gap. We're going to fill that gap on NVIDIA. We're at least heading to about 212 in my honest opinion. That's where I see NVIDIA going, so I love NVIDIA to the downside as well. I still like AMD to the downside, even though it's holding up pretty nicely today. Another disgusting daily candle on NVIDIA. I mean, AMD just wicks up to this $80 level every day, man. It's crazy. But you can see we're still losing that 200-day moving average on AMD. That's where it's fighting. It's trying to hold that 200-day moving average. But we break out of this box here. You see this box from 76 to 80. If we break out of this to the downside, I love it to the downside. If we break out of it to the upside, I'm cutting my losses on my puts. But that's what I have for AMD. For NVIDIA, I'm cutting my puts. My risk is 239. We break above 239, I'm out. I'm risking about 20% on my June puts. So long dated on these companies, AMD and NVIDIA especially. You have to buy the time because these are very volatile. They will they'll do crazy things. And you have to have the time to wait out the craziness because the craziness will just melt your contracts. If you're only 3 weeks out on puts on NVIDIA, I mean, if we do go straight down from here, you're going to make way more than I will. But NVIDIA, I don't think will just go straight down. I do think it's going to do bear trap stuff, bull trap stuff. It always does. So that's where I'm seeing NVIDIA, and it looks like Nasdaq's kind of pushing up here at the end of the day. Another just bounce on 290, man. I'm telling you, this 290 level, but I'm seeing volume increasing. Man, things look good to the downside still, man. I'll tell you what. High volume all across the board. Sheesh. You can see the S&P 500 back below this downtrend line. You see that year-long downtrend? Look at that. We tried to break above it. Oh, we tried. It ripped up to it. It ripped up to it at 396.50, but these levels I've been telling you guys have been just absolute money. Absolute money. 393.50 on SPY is everything because you got that 200-day moving average right there. It's a key level. You can see that was past support. We bounced off 393.50 and went straight to 417. So that's a massive level. And the Nasdaq's doing the exact same thing with 290. You can see where we were ripping up. We got a pullback to 290, and that sent us straight up to 313 on Nasdaq. So below those numbers, even better to the downside. But those are the key levels. So the bulls have to hold these levels, which means we are going to see choppiness. We're going to see bounces up, bounces down before we eventually break that level. But right now, the buyers are just getting more and more exhausted the longer this goes on. I have to drink some water because my throat is on fire. So that's why I say you have to buy time on your contracts. Weeklies, you're just going to get roasted. If you're 2 weeks, only 3 weeks, maybe even a month out, you're just going to get roasted. You have to buy time on these contracts. I'm telling you. What else are we looking at? Amazon. Jeez, dude. I wish I shorted Amazon. Amazon's just going straight down, dude. It's rough for Amazon right now. Microsoft, I believe, is down about 1%. Microsoft making new lows. So you see all the big companies. You're seeing Apple. We're making new lows on this pullback. We bounce off 145. Below that, key level on Apple. My next target for Apple is 141.79. That's my next target to the downside for Apple. For Microsoft, next target to the downside is down here at the bottom of this box at 243, let's say. That's our next previous support where you can see we bounce off that. We went straight to 277. So that's my next level for Microsoft. Just weak volume on some of these companies, though. Very strange. But Microsoft also lost that 200-day moving average. Google is a little green today, but Google has just been getting beaten to shit, man. Google is having a rough go of things. You can kind of see where it's bouncing off that trend line, so I expected Google to kind of bounce there off that $90 level, but still looks pretty good to the downside, man. I don't know. You can just look at these massive companies. These are the big ones. These are the Microsofts, the Apples. You can see the trend has flipped on all of these, on Google, on Amazon. This is about 15% of the S&P 500 with these companies, I believe. You see the trend has flipped. And now you can see that tech is weaker than the S&P, which tech leads the market up, it leads the market down. So, you know what I'm saying, huh? You know what I'm talking about here, right? What else do we got? I think that might be it. I think that might be all the companies I wanted to talk about. Square, yeah, Square's bouncing off that trend line. SoFi, still bouncing off that trend line. Datadog, yeah. Yeah, man. Sheesh. Let's look at our futures chart real quick. Same thing, dude. I told y'all. I said supply and demand. So supply and demand has been so ridiculously money for this market. It's been actually insane. I told y'all. I said 39.50, expect a bounce. Do not go short. And sure enough, look at these hourly candles. We zoom in on the 15. Look at that. We dump down, just go straight back up. Dump down, we bounce. Dump down, we bounce. So supply and demand, very strong. It's the best. You got to have supply and demand in your arsenal. Absolutely need supply and demand on your charts here. So same thing, man. Next target is 39.20 on the S&P futures. Nasdaq, even better. Look at this bounce, dude. Almost to the cent. 11.92. Just bounce right off of it, boy. Perfect bounce off of there. But same thing, just making lower lows, lower highs, lower lows. So everything looks good to the downside on super high volume on the Nasdaq futures. Look at that daily candle on the Nasdaq futures. All these candles have wicks to the upside. Every day, every single day this week, we have been getting these intraday pushes to the upside, and then the sellers just take control. Every day, the past 3 days, we've had this. It's so crazy. We just constantly get these from 290 all the way up to 293. These big 1% moves to the upside that just get completely faded, and they're always on weak ass volume. And then the buyers they take control over lunchtime, and then the sellers come back from lunch, and then they flip the switch, and the market goes back down. Man, it's crazy. It's so predictable. Every day we've been doing this. It's actually insane. So. That's all I got for you today. I would ask you to please consider dropping a like on the video, drop a hit the sub button, hit the bell. I really appreciate you. I do these all just for funsies every day to keep me engaged in the market. And if you learned anything new, I'd appreciate a comment letting me know. If you hated the video, if you disagree with everything I said, also drop a comment. I appreciate all comments. So thank you very much for watching, and I'll see you guys on the next one. Oh, actually, let's look at bond yields. Oh, look at bond yields. They're shooting up. There you go. There you go. There's that break. I told y'all. I said, hey, look at this. We can't break above that. Looking like we're breaking above that on bonds. Looking like bond yields are heading for new highs. Not good for the stock market. Not good at all. I think the dollar is actually down today. Oh, yeah, the dollar is going down pretty good. So, thank you guys for watching. I will see you guys on the next one. Peace.